Hello, hello. Welcome, welcome, friends. You're on the right place at the right time. And today we're going to talk about market rhythm and how to read the markets. So the first thing we're going to start with is a commercial. If you find what we talk about today interesting, you may be interested in the Worm and Lighthouse trading course. You can find out all that information by clicking on the link there in the down below or wherever the link is, or you'll see the page pop up and it'll give you the information there essentially. Here, I'll give it to you right here. So we haven't had a loser yet, and we post the live chart, live trades and all that stuff, so you can see that. I'm going to put this link out for you right now. Here we go. You should see the page. The page should be visible. Anyway, all right. Yeah, so I think actually all of these are worm trades except the euro pound here. This one was not. And then the other one, I think the euro trade and the pound trade, those were also different trades. But the rest of them are all, in fact, we just had one cash out on the gold right here, and I have one, I'm sitting on one right now in silver, which is up a little slightly, so we'll see. Maybe that'll be the first loss, who knows. But anyway, that's going on now if you'd like to join the Worm and Lighthouse. What we're going to talk about here today is reading the markets. It doesn't really matter if you're trading the Lighthouse or the Worm. When you're reading the markets, it's going to give you a distinct advantage. The reason why is because you will understand which phase the market is in. It doesn't really matter what style of trader you are. If you are a breakout trader, so like maybe use Bollinger Bands or something, or channels like this, Pound New Zealand, breakout, right? Or maybe you're a reversal trader, so you trade when it hits resistance, you sell, when it hits support, you buy, sort of thing. Or a trend following trader, so maybe what you do is you go, okay, oh, we're back up above 100,000. I thought that was the case. I checked my cryptos today and I saw they were up, so I thought Bitcoin was probably up as well. So what normally happens is traders look for their signal, the reason to get into a trade, and they don't consider everything going on around the chart. So I'll give you an example. If I just looked at this kangaroo tail right here on Bitcoin against the US dollar, if I just focused on that and didn't focus on the fact that, you know, we've been in this massive consolidation box, and in fact, the tail of our kangaroo tail is really just bouncing off the bottom of this box. What was resistance over here is now support, and it was support again with our flash crash kangaroo tail, which, by the way, this happens all the time in Bitcoin. All the time. It's very, very common that you'll get a sell-off, and then, you know, you wake up in the morning and you say, what happened? And then it, you know, it's like a 30-minute, 45-minute sell-off that's, you know, over before you blink. So by not paying attention to the fact that we're in consolidation, I might look at this kangaroo tail and give it more significance than I should. All right. Now, I think probably the best way to do this for you guys will be to fire up the charts here, the Forex tester charts, and we will just go free balling and we'll see how we go. And I'll show you how I interpret the market. And usually when I do this with my one-on-one coaching clients, they find this to be extremely valuable. So I think that might be what we should do, is that. So what I want to do, guys, is I want to give you the opportunity this is the 1B1T trading system right here, this test. Let me set up a new one. So we'll set up a new project and we'll call it Market Rhythm. And I want you, I don't want any funny business. So what I want you to do is choose 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. All right, so we'll add. All right, so what I want you to do is you guys pick a number between 1 and 20. All right, just put it in the chat box. Put it in the chat box. Should be open. Chat box should be open, and then we'll go from there, and we'll figure out what we should do in terms of, yes, 1 to 20. Are you unable to put it in the chat? Or in the Q&A? Yeah, Michael? Michael has a question. Yes, Michael? Okay, I guess no question. All right, so number between 1 and 20. And then I'm going to pick a random one that you guys offer. Okay, based on this is how we do this. We bring over our random number thing right here. Yes, if you are in the Lighthouse and Worm trading system trading room, we are going to have a session tomorrow morning. It's 10:30 a.m. London, 5:30 New York time. So that's the next session that we'll have. Next live session, yes. Okay, so I'm going to give you, yeah, okay. So we want one number. Okay, so I've got 27, all right. 29, 30, okay. One number between 1 and 30, and I'll pick the one that you did. Oh. Generate one random number between 1 and 30 in one column. Yes, give me one number, please. 5. Okay. Number 5. That's Paul. Paul says 7. Okay, 7 it is. So we are going to generate a new one here. This is rhythm. And we're going to find out which one is 7. 1, 2, 3, 4, 5, 6, 7 euro pound. Okay, fine. And we'll start 2009 to today. We'll just use 1 minute data. It'll be faster. Okay. So that's going to give us the data for the euro pound. And while that's going, well, so while that's loading up so we can do this in Forex Tester, we'll talk about what is market rhythm. So it's important to remember that when you're trying to interpret what's going on in the charts, we have a filter that we use. That filter is the trading system that you're using. Now, I typically won't do that, and I think I think this is the wrong way to do it for most traders, which is I will look at the charts and I'll instantly think there is a trade or there isn't, and as soon as I realize there is a trade, which is almost within a couple of seconds, it hits me. Yes, this looks really good. Then I'll decide which template, which filter, which approach, in other words, which trading strategy I'm going to use to get into this trade and set my entries, my exits, my stop loss, all of that. Normally, though, what you would do is you would have a strategy that you have a lot of confidence in because you've worked with it in Forex Tester or naked-markets.com, which is an excellent trading simulator as well. One of my students, beta trader, Dennis, he came up with that. It's really, really, really good. Or you've traded live. So you have this experience in the strategy, and so you're viewing the market through that point of view. So this could be a naked strategy. This could also be a indicator-based strategy. So if I have a naked strategy based on this trend line here, I'm waiting for the market to break this trend line and fall, and then when I back it up, I go, okay, that's fine. And then what's going to happen is I have this other, you can't actually see it here, but there's another low point over here, and it basically connects to this low right here. So I would say, all right, I'm waiting for the market to break this trend line here and then fall down to here where I take profit. That would be a naked strategy. So I am viewing this market price action through the lens of it's following a trend line. And, oh, do I have our data? Completed. Okay, cool. Now what I'm going to do is just we'll create our, we've got negative swap on both sides, which is great. Okay. Excellent. That's great. Okay, exit. And then we want to open up a okay. So we're just going to go ahead and rock and roll here. This is 1 minute. We don't want that. I'm going to go ahead. Well, which time frame should we use? I'm going to use the 8 hour. Okay. So 8 hour is 480 minutes. I like the 8 hours, so we can use that one. Okay. And then we're going to do that. And we're going to go with our dark scheme. Nah. Let's do something a little bit more. Nah. Yeah, okay, we'll do this one. Okay, so I'm going to let this sucker roll. Okay. All right, I'm going to let this roll and we'll go back to the live charts. All right, so we're going to get some candles there and I'll show you how I look at market rhythm and how you can use it as well. So it doesn't really matter what type of approach I'm using, how am I viewing the markets. What I really want to understand is, are we in low tide or high tide? Are we in a trending environment or a range bound? There's only 6 types of markets. Let's talk about that. The 6 types of markets that we have, and it's really important based on what our approach is going to be, how are we going to enter into a trade, that we understand where are we at, because based on where we are, we will want to either take a trade or not take a trade. So if we're a trend follower and we pull up a market and it's not trending, it's not going anywhere, then we have to discard that market and move on to the next one. So the 6 types of markets are trending up, so uptrend, low volatility, downtrend, low volatility, uptrend, high volatility, and downtrend, high volatility, or high volatility. Okay, that's it. There's nothing else. So when we're trading or when we're looking at the markets, the first thing we have to identify is what's going on, what is happening. So let's look at this chart right now. This is the Euro Pound 8-hour chart. What's going on right now? Anyone? What are we seeing in the current market from here to here? What's happening? What's happening is the market, yes, exactly. The market is going down, but which of these 6 types of, or sorry, I forgot the other 2. That's why there's only 4. All right. The astute of you noticed when I say there's a list of 6 and then I only post 4. Okay, then there's range bound, or consolidating, depending on whatever, directionless, however you want to call it, high volatility, and range bound, low volatility. Okay, that's it. That's it. That's all there is, right? So based on our look of the markets here, I would say that we are in downtrend high volatility, which is type 4 here. So if we go 1, 2, 3, 4, we're in downtrend high volatility. Why is it downtrend high volatility? Because when you have a low volatility trend, you see very minor retracements like we did on this uptrend. See how this uptrend went and then it paused, then it went and it paused, and it went, and it flagged down a bit, and then it went, okay? At this stage, it starts to go a bit wild, but from here to here, it was a low volatility uptrend. Then it starts going a little bit wonky, and then it rolls over here, and now you've got a very high volatility downtrend. It's a high volatility downtrend, and this is important, when the pullbacks, the counter trend moves, take out a higher percentage of the trend moves. Let me state that another way, because this is really important. This is like a rider downer, right? When you are in a trend, and you will identify it as a high volatility trend when the counter trend moves retrace much of the trending moves. So this is a trending move from this high to this low. And this counter trend move here probably is about a 61.8% move. So we eat up 61.8 of the move from here to here. We eat that up in the counter trend move. Then we go down here, and then we probably eat up about what is that? Maybe 32% or something, 32.8%, something like that for the fib fans on that one. And now we're kind of range bound, okay? But this is probably a consolidation box, and then the market has an opportunity to continue and go lower. So let's advance these candles one at a time. Let's see if we can get some clues about what the market is trying to tell us here. Okay, this looks like a retrace or the trend is over. Okay, this is looking really like we're going to break out of this consolidation box. I should probably draw a box here. I should have done that. Sorry. So this is what I'm seeing is this. Okay, so if we break this box, this downtrend is over. All right. We didn't break the box. Interesting. So we still have a chance to break this floor. If I was a last kiss trader, I'd be looking at this. I probably wouldn't be looking at it on the 8-hour chart. The reason why, I'd probably look at the 4-hour, and the reason why is on a box, you don't want one candle straddling the box, going from one side to the other. We don't quite have that. We have this candle here that goes more than half the box, and this candle here goes, 3/4 of the box. So you don't really want to see that. You want it to be many candles going from one edge of the box to the other. And so in this case, this looks like we may get a trend continuation to the downside. Let's see if we break the box. No, still haven't. We're in the, okay, here we go. Now we're going to go, watch. Okay, this is a really good sign. It's not confirmed, but I believe that we are very likely to end up down here. Let's see if I'm right. How did I know that? How did I know that we were likely to go down there? Right? There's no funny business. I'm not, I'm not showing you some chart that's predetermined like most traders will show you. Oh, this is a perfect example of, perfect example because you cherry picked it. What we're doing here is we're looking at this market unfold. What is this? 2009, November 18, 2009. Now, I thought it was going to break the floor because this didn't look like a double bottom. So this pullback here, what does that look like? If you just focus in on this right here, from here to here, what does that look like? It looks like a downtrend with a mini pullback, trendy kangaroo tail, and then as soon as we slammed back down on the box with a giant candle, that doesn't look like a double bottom here, like it's going to hit, and go back up. That looks like a let's go, we're going to fall. The only thing that could have changed that and would have made me wrong, or not the only thing, but one of the most likely things would have been if this candle right here ended up being a giant engulfing candle and ended up closing up here. Then yeah, then we're going to end up back up here. Now at this stage, I would still be looking for a pullback to the box, last kiss style, okay? So this would be a last kiss pullback. Let's see if we get it. Okay, there it is. Now, we can still hop back up into the box. However, the next candle, the next two candles in particular are extremely valuable information because we will either fall away from the box, most likely over the next two candles, or we will close back in the box, which means this was a false breakout. Let's see what we get. All right, that's it, false breakout. We're very likely to come back down and wick into this box and then possibly travel back up to the top. Let's see. So the next candle should possibly wick into this box here. Didn't quite. Okay, there you go. The next one. All right, sorry. I missed it by one. Okay, fine. All right, sue me. All right, next. So now we are back in the box. We're showing support here. So what are we going to do? Probably, well, first of all, we're probably going to go to the middle of the box, which is right here at the very least. And then if we can get through that, we're going to go the other side of the box. Okay, we're going the other side of the box, right? Okay, we've wicked back down to the middle of the box. The middle of the box is usually not exactly the middle, but there's some sort of support area or resistance area in the middle of the box, and you can see that's what we've wicked into here. And we didn't quite get to the top. Let's see if we're going to hop up now. There we go. Okay, so I count that as a touch. That wick right there, that counts like that wick, you know, that's a touch. So now, we're okay, for one thing, the downtrend here is pretty much over, right? You could say that it went from here to here. It could restart another downtrend, which may have high or low volatility, or it could start an uptrend, or it could just stay directionless. But right now, we are most definitely directionless because we're in this box. Let's focus on the breakout here because that's, I think, going to be the easiest way to see what's happening. This looks like it wants to break out. Whether it's a false breakout with a long tail or a candle up and then a candle right back down, closing inside the box, we don't know, but we'll see. Okay, so we want to spend a few. This is a really important principle. When you're looking at a box breakout, you want several candles to close outside of the box before you come back and kiss it. The reason why is that confirms that the market wants to be up here. If my next candle just goes wham right back down in here, then I know this was a false breakout. That's okay, but it's not. I'm still not convinced we're going to go higher. Okay, well, let's see. This might fall back into the box here. Okay, that's good. That's really good for a bounce off the box. We need a big yellow bullish candle now. Please, now, or the next one. Next two candles. Give me one. It's half-hearted. Okay, that's looking good. So this is going, if we go to the line chart, this is going to look like we are bouncing off the box here, okay? That's what it's looking like. Okay, good. Okay. We still haven't been able to get out of here. So this potentially could be like we had over here, where we had a false breakout. We had a breakout. It was looking good, and then ended back in the box. We could definitely happen. That could happen right here. No, we're still respecting the edge of the box, so it still could bounce here, but we're running out of opportunities. Okay, we're back in the box. So now maybe it'll wick into the box here and fall back down here. Nope. Okay, we're back out. Let's see. Okay. So we're not going. We're going to come back down here. Most likely. We're going to come back down here. Let's see. Are we going to? Oh, we're still thinking about it. Yeah, we're going nowhere fast. You can see how the market is respecting it. The line chart will show you, but we are not in breakout mode. Okay, we're going back down to the bottom of the box. There we go. Breakout to the downside. We've wicked into it. This would be an Acapulco trade for not quite a lighthouse. So this is Acapulco breakout. Now, we need to see a bearish push off this box or it's another false breakout. Oh, great. So if you look at the line chart here, you've got a nice bearish push. I know this is kind of boring because it's consolidating market, but once we get into trending, I'll show you some other cool stuff. All right, so it's a false breakout. So we're still not going anywhere. All right, push off of this. Nope. All right, I'm just going to wait until we break out of the box here, and then we'll talk about trend stuff. All right, we're out of the box. We may see a pullback or we may see a bearish flag here. Bearish flag, okay, we had just consolidation. So this is a downtrend now. So far, this downtrend, now you could say it's just a breakout, but it could also be the early stages of a downtrend. And so far, we have low volatility because our pullback was just a sideways chop. So the principle is, if you're looking at a high volatility trend, the pullbacks are going to eat into the trending candles. So these are the trending candles here, the big three. 1, 2, 3, and then 1, 2, 3. These are the directionless candles here, where they'll often, you're in a pullback mode when you get wiki candles and alternating color and wiki. That means we're in pullback mode, okay? So we're probably due for another pullback here or a sideways chop. No, still trending. That's good. Okay, now, okay, so the main question I have here is, do we get a bearish flag? What is a bearish flag? A bearish flag will be something like this. Or, whoa. Or another option would be we get a box. And a box consolidation might look something like this, okay? Which is what we had over here. This is a box consolidation. That's what this was right here. That was box consolidation, right? And then it fell. So let's see what we get here. Okay, we're following our little trend line up nicely. Market is behaving. So this is not a box consolidation. We can strike that from the record. This could be the end of the trend. I don't think it is, but let's see. All right. So it's really critical how the market behaves now when it hits this trend line. This is looking like a high volatility downtrend, but it could also be the end of the trend if we don't take out this low. Let's see what happens. Okay, we've broken our trend line. We may wick back up into it. There we go. And then we should push off of this and go lower if we're in a downtrend. Okay, so we should take out this low now. Okay. It's starting to look more like we're in consolidation. Notice how each candle gives us more information. Oh, there we go. Cool. Okay. Yeah, this is another pullback. So this was the downtrend, pullback, downtrend, pullback. So it's sort of a high volatility downtrend. We really need a bearish candle right about now. Or I would say, we're at the threat is that it's over. Yeah, okay. All right, so we're no longer in a downtrend. We're basically directionless. And whenever it's directionless, I always try and fit a box around it if I can. Sometimes you'll get a channel. We haven't really established the top of this, but we'll see if we can. We should be able to establish the top. Okay, we have. So you can see that wick right there. See if we break this. No, we're still in the box. So this is what's happening. We're waiting for a breakout. And I really want to get a breakout because I want to talk more about trends. Okay, here we go. We may come back down and bounce off the top of this box, which is fine. Or we may just flag down. We may just flag down at this stage. Okay, great. All right, so we're consolidating now, but we're still looking at this as an uptrend. So sideways consolidation. We need a big blasting yellow candle. Big one. Go. No. Okay. All right. We're sideways now. Okay, we're back in another box. Most likely. Let's see. All right, let's see what happens. Are we going to define this? We're just directionless. Okay. All right, I'm going to wait until we get going. I want to give you guys some trendy stuff. Okay, so maybe this is a downtrend, pullback, high volatility downtrend, but we really have to take out this low if that's the case. No, we're stuck again. So this is, I would call it fairly high volatility consolidation. Whoa. I want to move this box over here like so. Something like this. Let's see. Okay, we've hit it. Yep, we're in this box. As you can see, doink, doink, right? We are in the box. Okay, here we go. There we go. Now let's see if we get our little bearish flag here, or maybe a last kiss. No. Still sideways. Okay. Still not going anywhere. We again, we have this box, as you can see right here. So still going nowheres. All right, last kiss kangaroo tail perhaps. Let's see if we get the bearish candle after this. That should be a last kiss if we get the big bearish candle. No, back in the box. All right, there we go. Bullish candle retrace. Bullish candle retrace. No. All right. I want to back this up and see. You could argue that we're making, we are making lower lows and really volatile retracements. The problem is we took out this high. We're not making lower highs now, so that one's probably over. Let's see if we get out of this box now. There we go. Okay, looking like high volatility uptrend. Okay, can we take trades? One of the questions I had for you today is, can we take trades, naked trades, just based on market rhythm? The answer is yes. That was one right there. I just missed it, this big shadow. But let's see if we can find some here. Okay, this is I would call this a high volatility uptrend, but I'm not sure. This retracement here probably shouldn't take out these lows. If it does, then the uptrend, okay, that's great. All right, this is an excellent, excellent pattern where we had the pullback here, and then one candle just destroys all 4 candles here, right? It engulfs 1, 2, 3, 4. Brilliant big shadow. I love these big shadows in a trend when they do this. So I'm going to go ahead and put my stop loss down here below the low, and we will go for 111 pips of profit. We'll risk 1%. So, and then we're just going to duplicate that order, but we'll have no profit target, okay? So what I'm saying is that since about here, I've identified when we took out this high right here, we're in an uptrend. Uptrend, sideways consolidation, uptrend, pullback. I believe it's going to go higher now. Let's see if I'm right. Well, so far so good, but I haven't been able to move to break even until we get into the, closer to my target. I'm going to go ahead and move to break even now. And let's see if we can cash out my target. Okay, so we're back in sideways consolidation. Or sorry, retracement. Could be sideways. Okay, here we go. I'm going to go ahead and put a buy stop above this high. But my stop loss is going to go all the way down here, below this here, because I think it's breaking out. This is a little bit of an aggressive approach. So we'll see. 142 pips of reward. And I'll duplicate this one. And I will leave my second one open. Okay. Oh, no. We're in retracement mode now. See if we can get out of this. So this was the move. This is the sideways. We need another move up or I'm going to get stopped out. Okay, here we go. I think we can do this. Go. We're going to get stopped at a break even. Okay. These retracements are taking up almost all of the, the trending moves, or at least with this recent one. So I need a big candle here to tell me this trend is still going. Or okay, so there we go. We'll take this one. I have to say I don't have a whole lot of confidence in this one. I had a lot more confidence in the other two than I do this one, but we'll see. See what happens. If this doesn't go well, then the trend's probably over. I mean, you could argue this is a giant consolidation box here. Yeah. Oh, great. Okay. Now, we'll move stop loss to break even, and we're going to try and ride this sucker out. This should be a little bit bullish flag, and we should go up just like we did here. Up, bullish flag, up, bullish flag. So we should see another, if we're in an uptrend, should see another big candle here soon. Well, almost. It's kind of a gap there. Now, I'm going to move my stop loss below this swing low here, okay? And we get stopped out. Okay, so this is over. This trend is over. Most likely it's, either going to go sideways or you'll see bearish flags now and it'll start falling. Let's see. Yeah, it's going to be a big bearish candle now. Doink. Maybe not. All right, we're sideways then. All right, we're sideways. So when you see, one way to look at the market is it doesn't matter if you're in an uptrend, a downtrend, or a sideways chop. You always go through the flow of what I like to call high tide and low tide. So you're going to have big candles go up and then retracement candles down, and then big candles down and retracement candles up, right? So when you're in a sideways market, what will happen is you will have both. So another way to state that, because I think I need to clarify that. Another way to state that is if you see this right here, everything in this box, this is what you'll see in an uptrend, right? Trending candles, pull back. Trending candles, pull back, okay? But you'll stack them. You'll have a bunch of them. Boink, 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 all the way up. And when you're in a downtrend, you'll see this, okay? Which is the trending down candles, right? Like we have these three here, 1, 2, 3. And then you'll see the sideways like this, or the bearish flag where it goes a little bit higher, right? And you'll see a bunch of those doink, doink, doink like that. So it's the repeating pattern. However, when you're in a sideways trend in a choppy market, you'll see both. So you'll see Frankenstein, right? You'll see part of it is going to look like the downtrend with the big bearish candles and the consolidation or retrace, and part of it's going to be the uptrend candles with the retrace, right? So that's how you know you're in. That's one way. There's another thing to keep in mind, to figure out whether you're in a trend or not. But when I see both of these, I know, okay, something, I'm probably in consolidation here. The only thing I can say, though, that would just would give me evidence evidence against this would be if we have a giant bearish candle right now. Because you could argue that we're going down, we consolidated, we went bearish flag, and we're going down right now. And if we're going down right now, we probably have another big candle in store for us. So let's see if we respect the bottom of this box, which means we're in consolidation, or if we actually end up with a big giant candle here, because that would mean we're in a downtrend or early stages of a downtrend. Okay, we're in a downtrend. So do you see how? So one of the things that I think is really useful as a trader is you want to think in terms of probabilities. And so my hypothesis was that we were going to bounce around here in consolidation, but I had to acknowledge that there's another alternative hypothesis, which is that this was just a bearish flag and that we're going to go lower. So we went lower, now we went sideways, and it looks like we're going lower again. So more trending candles perhaps. There they are. And now, do we go sideways? Do we make a bearish flag? Either way, I could probably find reason to take a trade here. Like if we take out these wicks here, okay, we're in sideways consolidation for some time. All right, maybe maybe what we're looking at here is this. Bearish flag. Let's see. Ooh, there it is. All right, so we've broken. Now we may wick into it, but we're probably going to make some big bearish candles now. Okay, now we're going sideways. We really need to get off this floor. If we're in a downtrend, we can't hang around here anymore. We need to go. We need to get out of here and go lower, like now. There we go. Okay, finally got out of there. Now we're going to go up and we'll do another. So one way to get into these downtrends, or uptrends for that matter, is you wait for the market to break the trend line. Now, I don't know if there's a trend line here. I'm just guessing. But if there is, there's going to be a point, and it's still in a downtrend, there's going to be a point where you get a giant, massive bearish candle here. Oh, what did I do there? My trend line was moved. Okay, so if this is a downtrend, we got to take out this low. We really do have to take out that low. With no take profit on my second position. Okay, let's see if we can take out this low. There we go. Now we took out that low, but we need to take out this low really to prove that we're still in a downtrend. Not so good. I think it's going to go, but no. It's going to be a loss. All right, first loss. There we go. So what happened there was I mean, the safest way to do this is to wait for it to break there, but I was trying to get in on the, on the drop trade, basically. One clue also is that we did take out this high. So this high was higher than that high, which technically in a downtrend, you don't want to see that. This could be an uptrend, but it also could be sideways. Yeah, we're in sideways now. So we can draw a box here, and we can wait for a breakout of this spot right here. Okay, so we're going back down to the bottom of the box here. Or not. Okay, so this is great. If you're a breakout trader, you love this. It might come back in last kiss, but at this stage, it's also, I think, quite a high probability that you're going to see another giant bullish candle here after this little consolidation. So let's see if we get that. Okay, so maybe we bounce here. We need to bounce hard if we're going to last kiss this, because otherwise we're going to end up back in the box and there's no trade. Okay, no trade. So that was a false breakout. Okay, now we get the V bottom. This is great. So this is, where's my chart? See this V bottom? That's when you get a really high close, almost like an engulfing move. So that means if we can take out this high here, we're probably going to go really high. If we can take out this wick. Can we? No. Okay, we're back in the box. Okay. False breakout city. Okay, maybe downtrend. Okay, little tiny candles here, wicky candles. So I would actually, you know what I would do? This is an aggressive play, but I would actually put a sell stop here below the lows here to see if we get a giant boom candle. And my stop loss I'll just put up here. I don't really know how far this is going to go. So we'll see. And we'll do this. Okay. So I got 2 orders in, but it's probably going to go a little bit higher before it triggers me. Okay, all right. So that's why I use sell stops. You avoid a lot of losing trades if you do that, right? Okay. We're probably just sideways now. Maybe an uptrend. Okay, maybe an uptrend. Let's see. If we're in an uptrend, we'll take out this high here. I'll put my stop loss down here. Again, I don't know how low it's going to go. How low can you go? And then we'll duplicate this one. All right. Let's see. Do we take it out? No. No. Okay. All right. I think we're chopping around. I want to see a break. Euro pound is not necessarily the best pair for trending markets. Not like a yen pair, but there will be some moves here. All right. Let's see. We should see a little pullback. Oh, that looks great. I'd love if that were a proper trending kangaroo tail. It's not quite. Ah, there you go. That's what we're looking for. Proper trendy kangaroo tail. Let's see if we can go on this one. There we are. And then we'll duplicate this. We're in. And we're going to move to break even. So you see what happened there is it looked like it may be an uptrend, deep pullback, uptrend, pullback. Trendy kangaroo tail tells me it's the end of the pullback. All right, now I'm going to, I want to see a bounce here, and I can move my stop loss below this low if we get the bounce. There we go. Stop loss goes here now, and we want to see a good push here. There we go. That's great. Another low is made. So I'm just trailing my exit below the local low. That's it. That's all I'm doing. Now we need to push here. If we're still in an uptrend, we need a big candle to take out this one. Okay, not a good look. All right, that's it. Trade over. I think they both positions made about the same. That'll often happen. I think that actually happened in my most recent trade here. So a lot of times, so you saw that trade we just had with the gold trade from the other day. You know, this was the target here, and this was the trailing exit. See how the trailing exit didn't make the same amount that the other one did, right? These are just the last trades from the last couple months. It's a 60-day period, I think. Okay. Oh, wrong chart. We'll go to our actually we can look at some live charts now. So this uptrend looks like it's over. We're probably going sideways. Although if we get another blast here, another big yellow candle, that would mean that would give us ideas that we're maybe in an uptrend, but we're not. We're going choppy. Okay, let's back this up. All right, so I could draw the box here, but I'm sure you probably see it. It's probably something like this. We haven't really established the top of the box yet. Let's see if we push away from this. Okay, yeah. So this is probably the box. All right, maybe we've broken out now. So big candle, little candles. We may come back down and last kiss it, but we also could just flag down here slightly and then go like this. Let's see. Okay, we hit the box and we're in the box and the breakout is over. Notice how we're bouncing off the bottom of the box here with the big shadow right there. Ooh. All right. No, another false breakout, another false breakout. Still in the box here. I'm just going to back it up. Okay, here we go. This looks great. Look at this. So, trend, sideways, trend, sideways. This is awesome. So what we're going to do is put a sell stop below here, and then we'll go to the live markets and have a look at what we've got going on now, all right? Let's see what we have. Let's see if we get triggered here. If we get triggered here, it should be a big candle that does it. I guess. I guess that's a big candle. All right, here we go. There we go. All right. Now, we're going to move to break even. And if we get another, yeah, that's good. Now we need another big move down here. Now we're going to get stopped out at break even on the second position. Maybe not. Yeah, there we go. All right. So that's over. This has gone sideways now. Maybe pull back here. So this could be a really good trade if we take out this low here. This could be a little bearish flag and a boom, big candle. Let's see if that's the case. Okay, no trade. All right, so we're not sure what's going on here. This is a very volatile downtrend. It's starting to look like it's a very volatile downtrend. I was hoping it was a low volatility with the little sideways chop here, but actually look at these deep retracements. Okay, now we've just gone sideways. Yeah, we're just sideways now. No downtrend. Okay, let's have one more crack at it. If we can get a pullback here. Pseudo trendy kangaroo tail. So are we going to fall down now with a big fat bearish move? Let's see if we get it. We should get it. Go. Give me. Ooh, maybe yes. It should hit. It should hit it. And now we're going to go back up and... Oh, nice. Okay. If we get another big bearish candle here, I can put my stop loss above this little yellow one. Okay, we're going to do it now. Right there. Ooh, nice. So I need another push lower. There we go. And we can trail it. This one's good. This is a good one. You know, the reason why I like to split my positions is because occasionally you'll get a nice one like this. It's just the fat tails, right? So look at that. That one did way better. So that's 1R. So that's probably 2, 3, almost, yeah, 3 something R, something like that, which is not bad. And it was all on the basis of just looking at the market rhythm. This was a pullback. This was a pullback, but it was the pseudo trendy kangaroo tail. It's pseudo because pseudo means almost, right? Or sort of. Sort of. Because the open and the close were not inside the previous candle's range because the previous candle was too small. Because normally your trendy kangaroo tail have the open and close inside the previous candle's range. You can see here the close is outside of that range. All right, so there you go. Okay, does that make sense, guys? That's basically how you can look at the market rhythm. One telltale sign will be that you're in a trend when you have reversal signals like big shadows, double bottoms, kangaroo tails, and they get blasted. They get absolutely blasted. The market goes right through them and just ignores them. When you see that, you know you are in a trend. That's a big, huge clue. So let's see if we see any. Here's one. So here's our pound Aussie 8-hour chart, and look at what's going on here. You had a little kangaroo tail here, and you know there's going to be some traders that look at that and go, "Yay, we get to sell." Not really, because the next one just, you know, big shadow engulfed it and it kept going higher. So when you see these bearish signals that just fail repeatedly, that means, uh-oh, I'm in a trend. So don't fight it. Most traders, most retail traders, what they do is they go against the trend. We'll talk about this next in our next session, but essentially you can look at what the crowd's doing and it can give you a proxy for trend strength. There are lots of things to look at in terms of data that you can examine, but the other important thing to note is that most retail traders confuse retracements with trends. Okay, so when we were looking at, let's just find it. Let's just go to the 5-minute euro. I want to find something that's like we have something we can work with. You know, that's not going to work. Maybe the yen. Let's have a look at the 1-hour yen. Yeah, let's go with the yen. So I'm going to go 5-minute yen right now, and I just want to share with you. Yeah, let's try this. So here's our 5-minute yen. And so what will normally happen is, so it looks like we topped out up here and we're in a downtrend. So downtrend, pullback, downtrend. If we're in a true downtrend, we should be able to take out this level here, where this low is, where this bounce was. We should be able to take that out. But if, let's say we take this out over the next couple minutes, and then it starts coming up, a lot of traders on the retracement move, a lot of retail traders, they're going long there, and they think that it's over. They think it's gone too far. It needs to snap back like a rubber band. So a lot of what beginner retail traders do is they look to take counter trend trades, and they only have the only available profit they have to them is the counter trend move, the retracement move. They're not taking advantage of the big move, the trending move. Maybe we should find another one. Let's see if we can get Aussie. Oh, great. Aussie's trending. Okay, let's do this. We'll look at Aussie right now because it's the 5 minutes trending. So this is perfect. Okay, so here's what I'm talking about. Now, we may have some levels here that are important. We do right here and right here and right here, which is where we are right now. Okay, cool. So what rookie traders do is they take, when there'll probably be a retracement here now, right? A bullish flag. And they'll take this as the end of the road. They'll be like, nope, that's it. It's hit it. It's over. Now, they might be right, but normally they're wrong. As in, the most profit that's going to be available to them here is going to be like this. Like, you know, whatever that is, 6 pips or whatever that is, from here to here. Okay? Whereas if you're trading the trend, you know, you've got all this. You got 14. You got twice as much possibility here. So I do think it will pull back. In fact, we should probably just go to the 1 minute, right? We are crack addicts here, so we're just, you know, addicted to the charts. So let's do the 1 minute thing. But this is the real. This is the. Once you see this, you can't unsee it, right? Once you see what's going on, and that, you know, these bearish candles here are just retracements. This is just a sideways retracement. This is just a retracement here. And so the question is, can we get through this resistance? The candles will tell you, will give you the clue. So again, strong move, sideways, strong move, sideways, strong move, and now we're retracing a bit. When, after the retracement's over and it comes back up to try and test it, that's when we'll figure out if it's a double top or a breakthrough. It'll be really obvious. It looks like it's gonna. I think this candle should print now, right? I think it's time. Let's see here. I'm going to go ahead and put it right here. See how much time we have. We have 4 minutes. So this one's new. How would you know if it's a double top or a breakthrough? It's going to be the way that the candles react. I'll show you. So obviously right now it's looking like breakout, but we'll see. We'll see how we behave. So far, we don't have any signs of a bullish flag, so we don't really have a trend line to draw here. It's looking more like a box consolidation, like we're just going to sit and press here, which is extremely bullish. The other possibility is a squeeze play where we have the market kind of follow this trend line and it just keeps hitting the flat side here, boom, 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 and then it just will pop with a big candle. Yeah, this stuff will work on any time frame. Yeah, any time frame you can do this. We have, we're about halfway through our candle here, our 5 minute candle. Go back down to the 1 hour. So, or sorry, the 1 hour, the 1 minute. So yeah, this is looking like a squeeze play, right? This is a very bullish sign. We'll see how we close though. Usually the candles will change quite a bit in the last 10%. So the last 30 seconds of a 5-minute candle. And if you ever want to do a really cool exercise, you can take screenshots of the candles as they print. So if like if you're looking at a 1 hour, you just you know, every 10 minutes you have a look at the candle, take a screenshot, and write down what you think is going to happen. And you'll notice at the end of the candle is when it really changes. So we're in the last minute here of this candle. Minute 10 seconds. So obviously it's gone. The clue that we saw on the 1 minute was that it was a squeeze play or potential squeeze play, and this is the big pop, right? So squeeze play is when you have horizontal resistance and your trend line captures your lows here. Bong, bong, bong. So it keeps bonking against the trend line, and then eventually you get a big breakout candle like this. Now, it has an option to go, it could go sideways here and then go up. It could flag down and then go up, or it could fall all the way back down here and bounce and then go up. But most likely it's going to go up unless the current 5-minute candle, or the next 5-minute candle, I should say, in 20 seconds, the next 5-minute candle completely falls back down and closes back down around the low of this candle. That's the only real, that's the most likely, not the only, the most likely scenario if this is a false breakout, is it'll tell us like straight away. So remember we were saying the last 10% of the candle? Well, what happened in the last 10% of this 5-minute candle? It completely changed the complexion. And so when you're doing this exercise, you can do it on the daily, the 4 hour, the 1 hour, the 5-minute, doesn't matter. You take a screenshot. So if I'm doing a 4 hour, I might take a screenshot every hour. And if I'm doing a 1 hour, maybe every 15 minutes, I take a screenshot and I write down what I think is going to happen. Is it going to go up? Is it going to go down? Is it going to be bullish? Where's the market headed? And notice how everything changes in your last screenshot. It's so interesting. It's a really good way to convince yourself that the closing price is important. All right, so we're sitting up here. Yeah, I think this is probably, I think we've probably beat a dead horse. You've seen what we're talking about here. So again, this is the 1 minute. So likely it's either going to sit here for a bit and then hop higher, or it's going to flag down and then hop higher, or it's going to meander and come all the way down here and bounce off this and hop higher. Again, unless we get a giant, massive bearish candle like right about now, it's probably not going lower. It's probably going to keep going higher. If you're interested in learning a simple breakout strategy like we had here on these trades here, like on the gold, we actually have one on silver right now as well. It's open, a pound New Zealand, pound Aussie, all these Aussie Swiss and stuff. If you're interested in these, you can click the link down there on the Worm and Lighthouse and see information about that if you'd like to join us. Our next Worm and Lighthouse session is going to be live session is going to be 10:30 a.m. New York time. Sorry, 10:30 a.m. London time, 5:30 a.m. New York time. That's our next session. Yeah, the silver trades up like a little bit, not much. All right, what do we got going on here on the 1 minute? Okay, so maybe it's sideways consolidation, or maybe it's a flag down. It could also come all the way down here and bounce like we said, but we'll see. Depends on whether this floor holds here or if we start to go sag a little bit lower. All right, guys. Thank you so much for spending time here. I appreciate it. Next time we'll talk about what information we can glean from the crowd. That's session 2. We'll talk about crowd trading and using crowd information, and then then the next session after that we're gonna jump into entries. All right. So we got 6 sessions. This is the 1 of 6. We'll see you over the next week or so. If you'd like to attend more of these, we'll see you there. I wish you very happy trading, and we'll see you soon. Ciao. See ya. Bye. Yep. Have a great week.